blames President Trump. Guys, I couldn't be happier to have back on the line the one, the only Jim Willie. You know him from golden-jackass.com. Jim, welcome back.
Oh, it's good to be back, Sean. I call him China Joe. I also call him the resident of the White House. It's the resident of the fake White House outside Atlanta. You can go on and on. I don't even think that's Biden. He's long gone, or he's some kind of a vegetable lying flat all day long, asking for his candy. He's got his puppet masters. I think it's basically Obama and Victoria Nuland. That's who I think is controlling the Biden show. But I'm not here to talk about the Biden show. I want to talk about the danger coming that is not imminent. It's present. It's not about to start up. It's not even just starting up. It's been going on for several months. It has to do, Sean, with the double-edged sword. That's what I describe it as. In the home front, we got dollar problems with the big banks, with the Treasury bond, and with the U.S. government debt. And on the foreign side, we have even our allies dumping in large amounts Treasury bonds, and we've got the BRICS. They're about to come out with a gold token, which is very much misunderstood. I think I've got most of it figured out. It is not going to be a currency. So the BRICS are going to declare a new payment system that's not dollar-based. So we're in the process of losing the global currency reserve, which has two sides. Savings accounts, like with central bank Forex bonds, and trade payment that is done in the dollar, and both are going away. And that could not be more dangerous for the U.S. economy. Where it hits home is we're not going to have a great deal of variety or depth of import supply. And we're going to see scattered price inflation. I'd like to talk a lot about the Treasuries and the gold token from the BRICS. I've got in my July report that got posted last Sunday, I've got two key sections. One's on the dollar and one's on the bond. And I urge people to go to golden-jackass.com and sign up, because this is not what you will see in the Wall Street Journal, the New York Times, the LA Times. And we're starting to see records now come around.
Welcome to Gold Silver News, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now we'll show you the best scenes of the latest interview. But first, smash the subscribe button, hit the like button, and send us super thanks if you find our daily recaps valuable. Enjoy the episode.
Member, always Illuminati member. We got I'm sorry, I'm a pain in the ass sometimes, but I try to be pleasant. The U.S. government debt, this is where rubber hits the road. U.S. government debt is not going to be financed anymore. U.S. government debt will not be financed by foreign bond bidding anymore. U.S. Treasury bonds will have failed auctions. Foreign nations will be dumping their treasury because the yuan from China is gradually becoming the payment standard announced by Saudi as part of the BRICS and announced by Saudi to spread within OPEC. So BRICS is going to merge in policy with OPEC. They're going to go to the Chinese yuan and payment system. They're going to go to the gold token. And the U.S. government is going to lose its ability to finance its deficit, which is, for people who don't quite understand it, we build up a government deficit, and every month or two, usually every month, except for April, we launch $150 billion of supply and securitize it as U.S. Treasury bonds. Well, it sounds easy, but it's not, because there are no bidders anymore. They don't want it.
Yeah, there's no buyers.
There's no buyer. It's a buyer's strike, and it's not in the news. And I got a way of interpreting it, Sean. our vassal slave states will continue to bid, and that's Germany and Japan. But I think they got a back door. As soon as they buy it, as soon as they clear it, it goes straight back to the Fed, and they get their local currency. It's like a quick stop. It's for show. But we're going to lose our Treasury bond support. And for those who don't quite understand the ramifications, we're losing the petrodollar standard. It's going to become a de facto, I think, transitional petro-yuan standard. Later, maybe not so much later, the BRICS token will be used, and it'll essentially be a gold-backed system. Whew! We're going to lose, I've said this 5 times, we're going to lose our Treasury bond support. We're going to have difficulty covering our deficits, and we're going to do it by monetizing. Sean, this is Zimbabwe. We are now going full boat Zimbabwe.
Can I ask you something? I put this chart in front of Colin Plume just the other day. What does this chart mean to you? Does this sort of quantify what you're saying about the United States losing its bond support? Look at the price of gold. Look at the TLT basket here. The 7-year chart, well, they stuck together like brother and sister, and now they're diverging big time in just the past few months.
Well, it started, I see, in the spring of 22. Okay, so that's a year and a half, not quite a year and a half. Yeah, that supports my point. Look at just one little data point. Japan, in a 12-month period ending in February, dumped $238 billion of Treasury bonds. That's $250 billion almost. It wasn't in the news, not much. When it was, I saw it in the news, but it's a brief mention like, oh, by the way, we got a minor point here. It's not minor. And there's a paradox there. When any major nation sells the Treasury bond, their own currency is harmed because their own currency has the US dollar and the Treasury as its basis. All Forex currencies have the dollar and Treasury bond as its basis. This is mind-numbing what's coming. We're going to lose our Treasury bond support. We're seeing the biggest acceleration in selling of Treasury bonds in the last few months than in its history. And it's not in the Wall Street Journal or the New York Times. Okay. When the petro-yuan, this is another consequence, this is very big. When the petro-yuan takes over, or when I should say the petrodollar completely falls apart and other systems come in, the customers to OPEC, the customers to the Persian Gulf oil producers, and by the way, Iran is back in OPEC, all the customer nation, they call them client states, all of those countries begin to dump the Treasury bond and dollar assets. Okay, there is a financial firm, it's called Amundi, and Amundi is the biggest European, well, not sovereign wealth fund, wealth management. It's like a mutual fund, but it's like their BlackRock. It's a $2 trillion asset under management BlackRock type fund in France. And 2 weeks ago, they announced, Sean, they make the announcement, and it's not even the U.S. news, that they're divesting all their U.S. dollar assets, meaning Treasury bonds. Now, imagine all the different financial structures, investment structures that have the Treasury bond as its basis. Wow! An arbitrage of, say, interest rate swap derivatives, our bond derivatives, versus the long bond. That's hedge funds in the United States. But what about hedge funds in Europe? They're going to dump them. What about all the different insurance company and pension companies that have their Treasury bond as the basis of financial investment strategy? Yikes! In Europe, they're going to dump them. Okay, we are in extreme danger territory right now. Right now. OPEC has merged with the BRICS. I'd like to talk a little bit about the BRICS token because they've got a brilliant design, Sean.
There's a lot of confusion about the BRICS token here. You're calling it a token. Let's talk about that, because what I think the world is hoping to see, at least those of us who are awake, is a gold-backed BRICS currency to challenge the hegemony of the criminal, now fully corrupt U.S. Federal Reserve fiat note. And by the way, I do want to talk a little bit about a CBDC in this conversation. This giant international settlements, Jim, they want a CBDC. So to me, that feels like not only do they own the monopoly board, instead of doing a reset and a start over, they want to continue to own the monopoly board. You got to rent everything, you'll own nothing, you'll be happy. I mean, that's the Klaus Schwab model, right? But I want to talk about CBDCs, but go ahead.
Can I do the BRICS before the
Yes,
CBDC?
yes.
I call it the CBDC war, by the way. There's no agreement anywhere. But let me just say that and table it for now, because I'm loaded for bear in my little head with the BRICS and their token. They had a date of May 23rd at the St. Petersburg International Economic Forum, SPIEF, which, by the way, is now overshadowing the Davos. Notice that Davos happens and no one gives a shit. And then the St. Petersburg Economic Forum happens and everybody's got their eyes on it, what's going on. 45 nations signed $23 billion worth of trade deals. Okay, the important thing for me is the structure of the BRICS token. Now, I know I know a lot of people are craving, lusting even, for a BRICS gold currency. But would you settle for something better? I love it. This is as entertaining as it is frightening and historically unprecedented. They're not going to do a BRICS currency. Gold back. They're not going to do that. They're going to do something better and more clever. And I give a lot of credit to Putin and his team. And it could have some Chinese design behind it, could have some Persian design behind it. I really wonder if they've hired some Western consultants. I really wonder that. I'm not going to get into that whole angle, but here
White hat consultants from the West, because if they're anybody from Banana Joe's United States Fruit Company, they're not going to be on board with anything you're saying here, of course, because they're all on board with United Nations Agenda 2030 and the total takeover.
Yeah, I'm talking about like an independent former Swiss financial analyst. Okay, just something like that. Or a British guy who's in his late 60s, he retired from London, and he's doing independent consulting work. And these guys get grabbed on by the Russian design team. Okay, here's what they have and why it's better. They don't have a currency. They're letting us on the Western side talk about the currency. And they're talking about a gold token. We're talking currency, they're talking token. Well, what's the difference? Well, a gold token is going to have a gold backing. For a country, let's just say France. Let's just make up one, France, because France is in the news. They're on my radar for a number of reasons here that I could get to. They're being forced into following the BRICS parade. France is going to have to develop and build up their gold foundation. And maybe they have a decent foundation. French, and maybe another good one is South Korea. South Korea may not have a big gold reserve, but they're going to have to build up that gold reserve in order to earn and have available gold tokens. Okay, so in order to use the BRICS gold token method of payment that's going to supplant the US dollar as trade payment vehicle, these BRICS nations will have to be able to secure gold tokens. And the only way to do that is to build up their gold reserves. Okay, let's talk about what they are not. And then what they are. What they are not is a currency. And as a result, the Anglo-American bankers, New York and London, cannot attack it. Like they did the Turkish lira, like they did the Syrian, what is it, dinar or what, I don't know, real. No, usually royal monarchies have real. The Venezuelan bolivar, all these nations, the Lebanese currency, the Iranian rial. These nations had their currency attacked by the U.S. and London bankers. The gold token cannot be attacked if it's not a currency. And Sean, that's a very big advantage. Ask Turkey, ask Venezuela. Furthermore, the West is talking about the BRICS creating a bond. And the BRICS are not talking about making a bond. The BRICS are talking about a development bank, which would be kind of like an import-export bank, a development bank, like you borrow $5 billion or $2 billion and you create a gigantic port with rail facilities at blah, 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 roads, etc. Okay. In other words, construction loan. That's not a bond. The BRICS Development Bank is not a bond. It's not going to act like a bond. So it can't be attacked like a bond. So the West, the Anglo-American bankers, will not be able to attack on a currency basis and a bond basis. Sean, that's a big advantage. Then there's no interest rate for them to worry about because there's no bond. So they're not going to be worried about an inflation mandate, a differential with respect to the bond yield. Not going to worry about it. Not going to worry about an employment mandate. So there are big advantages for not being a currency and not having a bond associated with it. That's what it is not. Oof, what it is a token. And as a token, they're going to allow it to be part of a bank account. And we're actually, this is so ironic. We're seeing Zimbabwe lead the, I can't say it without laughing. We're seeing Zimbabwe lead the way in forging this path. Their gold token is now, they're capable of depositing that at a bank account. They're capable in Zimbabwe of converting dollars into their gold token ledger, their bank account in Zimbabwe for gold tokens, and they're able to use gold to buy the gold tokens. So there's going to be a lot of demand for gold. Now, what are they? They are a place to dump treasury bonds. All these countries are going to have to build up their tokens in order to use, build up their gold reserves in order to use the tokens. They're going to sell treasury bonds. We've already seen, I put in my May report, we're going to see an avalanche of selling of treasury bonds. And here we are in August, and there's a news story about how in July we had an avalanche of selling of treasury bonds. I try to be 2, 3, 4, 6 months ahead so people can get away from avalanches that do harm. I'm not going to get into interest rate hikes. I'm not going to get into that. But there's a lot more going on here. If a lot of countries, like I take France, I take South Korea, because they're two big important countries, but they're not giants on the global scene. If they sell a lot of treasury bonds, they're going to make a phone call to the Department of Treasury. They're not going to put $10 billion on the market in the Treasury. It'll shut down. So they call the Treasury Department and say, we want to dump. They're not going to say dump. They're going to say, we want to relieve ourselves. They want to relieve themselves of $10 billion. So the Fed is going to soak it up, and the Fed will become the bad bank. I'm expecting the Fed and their balance sheet to rise. It's now about 9+ trillion. I think it's going to zoom up quickly to 12 to 15 trillion. The Fed is going to become the bad bank, owning bonds that nobody wants. Hey! All these dumping will take place in various locations. United Arab Emirates has volunteered to be a BRICS dumping ground for treasury bonds, earning the anger and ire of the Treasury Department at the U.S. government. This is ridiculously risky, Sean. When the UAE accepts treasury bonds, I think they've got a conduit to the Fed by virtue of the fact that their dirham currency is pegged to the dollar. They've already got the conduit. They don't have to build it. Oof. we are going to see a gigantic, massive sale of Treasury bonds and purchase of gold. I've been studying for 2 months now, since May. Where is the supply going to come from? I think the Russians are sitting on 120,000 tons of gold.
I think China's sitting on at least 50,000 tons of gold. By some estimates, they're retaining 2,000 tons of gold internally in that country every single year going back more than a decade. So by some estimates, I've heard China is sitting on perhaps as much and maybe more than 50,000 tons of gold. Meanwhile, at Fort Knox, what's said to exist in Fort Knox if it's there at all? 8,000 tons of gold backing the dollar? What a joke.
85 or 8,700 tons at Fort Knox.
Well, let me ask you this then, because for the layman, and I consider myself a layman, sometimes I listen to you and you get a little hard to follow because you're going into such deep analysis. Let's just keep it real simple for the audience. What you're saying here means what to the average U.S. citizen as the debt clock? By the way, I just looked at this a week ago. I was doing a new spot for Noble Gold, one of my sponsors. The debt clock literally a week ago was 32,300 billion. A week later, it's jumped up, at least according to this debt clock, by more than $300 billion. So $32.7 trillion in debt. Meanwhile, the interest payments alone on the U.S. national debt are almost reaching $1 trillion per annum. And you're saying that the Fed is going to continue to buy its own bonds. I mean, the end is in sight. The writing's on the wall. What does this mean to the average U.S. citizen?
It means that our import supply is going to become at first problematic and then difficult and then totally obstructed. It means we're not going to be able to bring in imports. It means that only our best friends among foreign nations or vassal states like Japan will accept Treasury bills at the port. It means we're going to have a big, big problem with shortage of imported items. It means we're going to see a black market from China through Mexico and Canada, probably with trucks driving through the tunnel systems underground, providing a black market for imported goods, and the prices won't be as bad as what they otherwise would have been.
Well, let me just point one thing out before you continue here. You're familiar with this usdebtclock.org, right? You've seen this before? Okay.
Sure.
So these guys have done an expert job over the years of converting the dollars in existence to what the real price of silver and gold should be right now. This used to say something like 10, 11,000 gold, something like 700 plus silver per ounce. They've stopped calculating that price here, Jim, and that's because I think the debt is going up so exponentially, they can't even calculate the numbers. I mean, that's my guess, but the dollar to silver ratio in 1913 was $2.76 per ounce. And as recently as a couple months ago, I think the figure here on silver was $700, $800, $900 per ounce. They've stopped calculating it.
Well, you're focusing on the numerator, the debt. I focus on the denominator, and that's why I think they stopped. They don't know how much silver we have. What do you divide? What's the volume of silver? What's the volume of gold?
Yeah, there was a deficit. There was a deficit last year of, I believe it was 240 million ounces of silver, meaning we were burning as a world more than 240 million ounces of silver, more than the global production supply that is around 900 million ounces. Meanwhile, the criminals on Wall Street who manipulate it every single day, they would have you believe that silver is something like a $2 trillion annual market. It's completely preposterous. That's the paper market.
Yeah, I want to point out something regarding the unit of trillion, okay? I have two examples. One is if you have a million $1 bills stacked up, it reaches to the top of the Empire State Building. If you have a billion $1 bills stacked up, let's not worry about compression and stuff like that, okay?
You're going to take us to the moon with a trillion, aren't you?
It's the stratosphere, the outer level of the stratosphere for a billion $1 bills, and it is 1/4 of the way to the moon for a trillion. Okay, that's one example. What is a trillion seconds?
Yeah, I know you're going to take us. You're going to take us back to the time of Jesus or something, or before that.
Well, a lot more than that. A lot. I'm going to take you back to the dinosaurs. I did a calculation. It's not hard. you got 31.5 million seconds in 1 year. You just multiply them out. You know, get it all. I don't want to go through it. It's really simple. The number of minutes in an hour, the number of seconds in a minute, the number of days in a year, whatever. Okay. Well, 31.5 million seconds in a year, then 31.5 trillion seconds are in a million years. Okay? A million years. So you're heading back, you know, to the end days of the dinosaur, or, you know, not quite. Dinosaurs are a long, long time ago.
Yeah, if you believe in dinosaurs, yeah, I know. The whole hidden history thing of this world is all poppycock. You know, well, let me just say something, though. So these lizard people like John Kerry, they want to spend $1.6 quadrillion on what? Stopping climate change? Stopping the weather? So more money for bankers and the lizard people equal changing the weather? So just to put that in perspective, guys, about the Monopoly board, their funny money, and what a Ponzi scheme of control this is. $32 trillion in debt, and the skull and bonesman, the lizard man John Kerry, he wants $1.6 trillion to curb what? Climate change? That's $1,600 trillion. That's how insane the narrative has become.
Well, Sean, I have to lay it out a little bit more accurately. They want a gigantic budget in order to kill the great majority of life on our planet.
That's right.
Okay, let's be real clear. Let's look what they're doing with the Dutch farms in the Netherlands. 2,000 farms have been taken over. I heard rumors that they're going to build low-cost housing for illegal immigrants, you know, the unvetted immigrants from like North Africa and wherever. And the Netherlands is the #2 food producer in Europe. So where's the food going to come from? They're trying to wipe out food based on nitrogen mandates. They're acting like carbon dioxide is a poisonous gas when it's essential to life on the planet. You know, just ask any tree. I love that.
That's right.
A tree breathes in carbon dioxide and exhales oxygen.
Right, and the carbon dioxide levels on planet Earth right now are at record lows. And the bonesman will tell you with a straight face, because he's a grifter, he's a climate grifter, and his wife Teresa Hines flies around in a private jet, which now they claim they sold because he cares so much about the environment. But the lizard man, the skull and bonesman, John Kerry, will tell the American people with a straight face that guess what needs to be curbed next in the name of climate change? Agriculture. Agriculture, farmers are 33% of the problem when it comes to climate change. So your point's a good one. They want to stop food production. Why? Because they want to depopulate the planet. Why? Because Bill Gates told us in his TED Talk, one of these numbers needs to get near zero. And one of those columns was people.
Yeah.
That's innovating to zero. All of us die.
I have been following a number of individual figures, leading figures, elite types, and their faces. And that ain't John Kerry.
John Kerry, whether that's him or not, that is one ugly dude. And I'm talking like Skeletor level evil. Like the evil that has embodied that guy has taken over his face. And the same is true with a lot of these other people too. I don't need to name the names. You guys know them. They're all on the Democrat side for the most part. And some rhinos like Liz Cheney. But let me just say that the other problem we have, and we don't need to get into this, but you know that CIA mask program is very real. And who the heck is Banana Joe really? Because the ears are not the same ears as the guy from a decade ago. The teeth are not the same teeth from a guy a decade ago. And by the way, Trump keeps saying, I don't think that's him. That ain't the same guy. Trump is even saying it.
It's obvious. It's obvious. But it's kind of an IQ test. Okay, Sean, you want to talk about the CBDCs, and I'm loaded for bear. Should we go there?
Friends, thanks so much for tuning in. Just a quick word about our sponsor. There's no guarantee in any investment, so do your own due diligence. But I myself hold gold and silver. The US dollar has lost 85% of its value since the 1970s when Nixon decoupled the dollar from gold, and the government is bent on continuing the tradition. From now until the next elections, the government will simply print as much money as they want. The last time they did so, inflation went up 9%. Gold is the one asset that is proven to withstand this type of inflation. Invest in gold with Noble Gold Investments, and this month you can get a 24-karat, 1/4 ounce gold standard coin for free. Go to noblegoldinvestments.com now. That's noblegoldinvestments.com. It's the gold company I trust. Yeah, let's go there because they require our compliance. And the only compliance they're going to get, I think, in this nation is from the 70% of the people who can't think. That's the problem. The 30% of us who can think will never comply with their slave coin. But their problem's bigger than that. See, Americans are very myopic because we've been told since birth we're the most powerful, generous, incredible country on the face of the planet. Democracy exists nowhere else but here. By the way, we're not a democracy. We are a republic, a democratic republic. The mockingbirds always leave that part out. But the world's a very big place. So I'm not sure that the Fed is going to get everybody in the world on board with CBDC, but I know that's what the BIS wants.
That's what they want. But they came out a year ago with their concept and blueprint, and it got shut down for the Swiss CBDC, or, the Basel CBDC. I call it the Swiss because that's the country. Okay, the United States has its Fed coin, and nobody wanted that either. Well, why were they not wanted? Because they announced that they were not happy with the concept of decentralization, and they announced that they were not happy with the concept of transparency. They came out with their arguments against them, and nobody agreed with them across the planet. So we're going to be in the midst of a central bank digital currency war, or severe conflict, or standoff very soon, very quickly, and it'll be deep. The valid CBDCs will come from Russia, China, and Persia. I'm calling it Persia more than Iran because that's what they like being called. They have a gold-backed digital currency. They haven't launched them yet because they don't want the war to begin. They want the attention to be on the BRICS and that gold token. They'd rather avoid the CBDC war and come out with the BRICS token that will pull the rug out from under the Treasury bond. That's their plan. They don't need to go to war with newly created CBDCs when they can come up with a gold token in the BRICS and pull the rug out from the foundation of the US dollar, which is the Treasury bond. There will be no demand. There will be trifling demand. There will be a flood of sales and dumping. But when we get down to the CBDC war, when it comes to that, Russia has given us a hint. They have said, we're going to be delaying our CBDC. We're working on a digital ruble. They launched it a couple of weeks ago. I got a picture of it in my July report. And the Russians announced that due to swift obstructions, if need be, they will use XRP. But they're working on the gold token at the BRICS and the Union. So Russia is ready to use the BRICS token. And on the side, they're willing to use XRP, which, by the way, is being used across the entire Persian Gulf for small transactions like utility bills and small payments like check peer-to-peer. XRP is being used in the Persian Gulf. Let that sink in. They're doing a trial. And the headquarters of that is United Arab Emirates. They are a crypto factory. They've done $200 million worth of research. They're going to be the center. So here's my theory, Sean. We're going to get the gold token, and that'll be used a lot. That will be in lieu of the US dollar and Treasury bill as payment unit. We're also going to get something called the, I think it's called the European Payment Unit, the EPU. That's going to be maybe used for grain between Russia and Africa. But when we get down to a CBDC battle, where the United States says, okay, we want import supply from country X, and country X says, well, we'd prefer that you use the Chinese CBDC, the Americans are going to say, well, we have a CBDC, it's its Fed coin. And that importing, that foreign nation supplying the U.S. imports will say, no, we don't want your Fed coin. We don't want the U.S. CBDC. And country X will say, well, we prefer the Chinese CBDC. And it goes back and forth, back and forth. And Sean, I think they're going to make a compromise with XRP. Saying XRP might be the bridge between conflicting parties with respect to CBDC differences.
Can I say something for those who don't know what XRP is? That's Ripple. And there was just a groundbreaking ruling. I say groundbreaking because Gary Gensler is a Goldman snake who's been coming hard in the paint after Binance and Coinbase and crypto in general. According to Brian Armstrong, the CEO of Coinbase, they received notice from Gary Gensler saying remove all crypto from Coinbase except for Bitcoin. Bitcoin, they say, is not a security. It's property. But everything else, according to Snake Gary Gensler, is a security, even though we have Gensler on video from several years ago teaching a course at some university where he said, and I will loosely quote, Bitcoin Cash, Litecoin, and Ethereum are not securities. There was one more to that list as well. Anyway, he's changed his tune, but now a judge just shot him down in that Ripple case, XRP, and the judge ruled that not in all cases is XRP a security. And the crypto space went ballistic because Gary Gensler is a Goldman snake, and Gary Gensler wants to target crypto because Gary Gensler is all on board with the CBDC in my view.
I think a lot of these characters behind the scenes are buying up XRP. Here's just a logical argument. If you were involved with Uphold as a crypto coin exchange,
I am.
And you wanted to buy a bunch of XRP, you would have been limited, correct?
Yeah, actually, I buy most of my crypto, almost all of my crypto from Coinbase, and I store it all on a cold wallet storage system. But I do have Uphold because I was involved with Brave, and I'd get the Brave tokens via Uphold.
Okay, but Uphold provided an obstacle and obstruction for purchase of XRP. I've got 20 clients who said, I tried to buy $200 worth, tried to buy 1,000, tried to buy 2,500, and all I could get was 20 or 40 bucks.
Okay.
Okay, XRP was obstructed for North Americans using Uphold.
Well, and Coinbase. I'm sorry, but also Coinbase because as soon as
Coinbase banned it.
Yep, they had to get they delisted it because of the SEC's attack against Ripple and XRP.
Right. Okay, here's my argument. Very logical. If in the major U.S. coin exchanges they obstructed the XRP purchase, does that not mean that the Wall Street bankers were buying it?
Well, actually,
That's
I
my
think
thinking.
Yeah, I think that the thesis is actually logical. Now, a lot of folks do refer to XRP and have called it the bankster coin.
I don't get bogged down with arguments like that because I see its popularity growing as a transitional caretaker device between conflicting nations who cannot agree on a payment.
Well, let me just say this too, in regards to crypto in general. I respect your views, so let's just talk about it. I don't have to be a big XRP bull, and I don't have to disagree with you either, agree or disagree. I have long maintained that crypto and blockchain can be used for good or evil, and now we see with WorldCoin, by the way, they want people to sign up for WorldCoin, the same guy behind behind AI chat. He's come up with WorldCoin, so these uninformed folks in the third world and the second world and just dummies across the planet who sign up for this with their eye scans can get universal basic income with a global ID. No, thank you. Like I said, blockchain can be used for good or evil. Take a look at Bitcoin in El Salvador. El Salvador is turning itself around with Bitcoin.
I wish them luck. I think they've got a big challenge. I tend to think that the third world is probably the least trusting of WHO and UN and WorldCoin concepts. The third world is very low. Africa did not get vaccinated. Just think about that. The morons in the United States got vaccinated.
By the way, I should bite my tongue, and I'll apologize to the third world. Okay, the third world is not filled with stupid people. The third world is filled with victimized people who have been colonized and absolutely tortured by this New World Order system for much longer than I've been on this planet. And it brings me to what's happening in Niger right now. I want to share this with folks. France relies on Niger uranium for a majority of its power. The French colony of Niger has rebelled, and there has been a coup of the government. Meanwhile, Banana Joe demands the release of the Western puppet president from Niger prison, and here's what Nigerians have to say about that. We have uranium, we have diamonds, we have gold, we have oil, and we live like slaves. We can't accept it. The French must leave Nigeria. These people, I think the whole world is starting to rebel against this incredibly criminal, anti-human Rothschild system of control, the UK system of control, and by the way, the man behind the World Economic Forum and innovating to zero, and you'll own nothing and be happy, his name is King Charles, Jim.
Yeah, it's not Klaus Schwab, it's King Charles. I realize that. France is going to be, I think, the cutting edge on flipping Europe. They've got, you mentioned Niger. I hadn't heard the word Nigerian because it's so close to Nigerian from Nigeria. But they've got Niger uranium, they've got Russian grain, and they got Mali gold. And here's something you may not have thought about, but Tom Luongo and a few others have brought this to the table. The euro bond, the euro dollar rather, has been the principal item for French colonization and exploitation of European banks in Africa. They're using the euro dollar. And there's going to be a lot of obstruction, and that could be a part of why the U.S. Department of Treasury said that euro dollars are not redeemable in the United States. What is a euro dollar? It's the U.S. Treasury held in the European bank. Okay, there's a war going on, Sean, between the U.S. and the European banks, and the U.S. is trying to drive them into a derivative default before the United States. We push up interest rates, which pushes up the oil price, and Europe can't handle it like the United States can because we produce some. There's a war going on, and it's just incredible, this battle that's happening. I tell you, this is getting very, very scary, and I made a lot of forecasts 5 and 6 and 7 years ago. I called it the Eurasian trade zone, and that is essentially now the BRICS. I talked about a fake gold-backed U.S. dollar, and I call it the Scheisse dollar. And you're seeing now a Fed coin, and you're hearing about a rainbow currency that just not anywhere to be seen. Maybe it's because it's valid and it's dominated by Trump designer, and Trump designers are not in power. There's a lot going on. I think there is an entire government in absentia, in exile, or maybe even operating secretly in the United States out of Cheyenne Mountain.
Yeah.
There is a tremendous amount going on here, Sean. I know you're aware of a lot of it, but I do the best I can in outlining what is going on in the United States with the threat to the dollar and the Treasury bond. And we're going to have import supply difficulties, and we're going to have a CBDC war. And I have heard, and this has come back to me about 3 or 4 different times, there are 23 individual U.S. states that have applied for BRICS membership, which means they want to use a gold system of payment. And the gold token from the BRICS seems satisfactory to them. 23 nations, guarantee they're almost all red states. We're about to have a historical upchuck, vomit, stroke. This is, and I think something big is going to happen in September, October, November this year. I point to my vectors. I've talked about my vectors for the last 2 months in my newsletter. It's the banks, it's the bonds, U.S. government debt, which I think is already defaulted. It's the BRICS. It's the awareness of health issues and mandates. It's outing gain of function research. It's Ukraine, underground activity in Ukraine. There's a lot going on, and it all seems to be converging. Right now, we've got a lot of evidence mounting against Sleepy Joe, as you call him. And I think Joe is about to make a deal, Sean. And I don't know if this is a good way to close, but I believe that the surrounding evidence against the entire Biden family is so profound and powerful that they're going to force him into a resignation. I think it's going to come this summer. I think it's going to come this summer and fall.
Dear listeners, I was able to upload a portion of this interview, which lasted approximately 2 hours and 6 minutes due to YouTube rules. You can watch it in its entirety from the link in the description. Now, some brief information about Jim Willie will be given. Dr. Jim Willie is an analyst recognized in international finance and economic circles for his distinctive viewpoints. Commonly known simply as Dr. Jim Willie, he is often said to hold a doctorate in an economics-related field, though precise details about his academic record are not widely documented. He is best known for his work shared through his website, Golden Jackass, as well as various online interviews and podcasts. His main areas of focus include fluctuations in the financial markets, central bank policies, currency trends, and particularly the future of gold and silver. A defining trait of Dr. Willie's commentary is his emphasis on precious metals, gold and silver, as critical pillars of the global monetary system. He argues that modern fiat currencies, especially the US dollar, suffer from structural problems stemming from central bank policies and the complex nature of international finance. As a result, he foresees a scenario in which the dollar weakens while gold and silver strengthen. Dr. Willie is considered by many to be an unconventional financial commentator. His analyses often diverge from mainstream economic narratives, occasionally integrating views that some label as conspiracy theories. Yet this alternative perspective has resonated with a community of followers who value his exploration of issues they believe are overlooked by mainstream media and big financial institutions. 2. The Golden Jackass platform and content structure. Dr. Willie disseminates most of his research and opinions via his personal website, Golden Jackass. The unusual name is meant to highlight his unfiltered approach. He describes himself as presenting blunt truths without fear of reprisal. Many of the articles and reports he publishes on this site revolve around major geopolitical and macroeconomic developments. Typical topics on Golden Jackass include gold and silver market analyses. Willie is known for predicting significant spikes in gold and silver prices. He argues that continuous monetary expansion by central banks will ultimately raise the value of precious metals while eroding confidence in fiat currencies. Critiques of the global dollar system. Willie believes the US dollar's status as the dominant reserve currency will eventually weaken. He often cites the efforts of countries like China and Russia in developing alternative payment systems and gold-backed arrangements. Warnings of financial crises. Willie frequently points to risks that he says mainstream economists ignore, such as the overextension of credit, large-scale derivatives, and the excessive liquidity central banks have provided since past economic downturns. Geopolitical events and their economic effects. His analysis goes beyond pure economics to examine how geopolitics impacts commodity prices, trade flows, and especially the dollar's standing in international markets. Some content on Golden Jackass is available only to subscribers. This paid model supports his independent research, which he claims allows him to investigate topics not widely covered by mainstream financial analysts. 3. Economic analysis philosophy and methods. Dr. Jim Willie's approach to economic commentary blends macroeconomic data with monetary and geopolitical factors, resulting in what many consider a heterodox style. Key aspects of his method include historical cycle analysis. He frequently references major financial crises, such as the 1929 Great Depression and the 1971 end of the gold standard, to draw parallels with current policy missteps. He views economic cycles as influenced by political and social factors, not just by raw data. Debt and credit examination. Modern finance, according to Willie, is excessively reliant on debt. He emphasizes growing global debt levels and warns that they are unsustainable. Central bank balance sheets and leveraged banking practices are frequent targets of his critiques. Comparative currency analysis. Willie tracks how key currencies, the US dollar, the euro, the Chinese yuan, and the Russian ruble, compete against each other. He underscores the role of gold reserves and potential gold backing as crucial in these contests. Geopolitical context. Willie treats diplomacy, strategic alliances, and military advantages as integral to economic outcomes. He sees global finance and politics as intertwined, asserting that a policy shift in one arena reverberates throughout the other. Reliance on alternative information sources. Willie occasionally cites unverified or non-mainstream information, claiming that official data and media may conceal the full story. Critics argue that this tendency can lead to the spread of unsubstantiated conspiracy theories. 4. Main core perspective: transformation of the monetary system. One of Dr. Willie's central theses is that the global monetary system is undergoing a profound realignment. He believes that the post-Bretton Woods world order, in which the U.S. dollar has enjoyed near-hegemonic status, is coming to an end or is on the brink of doing so. As central banks keep expanding their monetary bases, he expects rising inflation to push individuals and institutions toward tangible assets like precious metals. At the heart of this view is the idea of the coming end of the dollar or the demise of the petrodollar system. According to Willie, the following trends are evidence of this shift. Countries increasing gold reserves. Emerging markets, including China, Russia, and Turkey, have been accumulating gold, potentially to establish alternative payment frameworks involving gold. Petroleum trade in currencies other than the dollar. Willie cites China's moves to pay for oil in yuan as a direct challenge to the dollar's monopoly in global energy markets. Alternative payment systems. New networks to replace or supplement SWIFT, such as China's CIPS, could undermine the dollar's role in global trade and lessen its power as a vehicle of economic sanctions. Willie portrays these developments as gradual, with many going underreported. The eventual result, in his view, would be a breakdown of the dollar-centric system that would profoundly disrupt financial institutions and national economies, while boosting the position of gold, silver, and other real assets. 5. The role of precious metals, gold and silver forecasts. Dr. Willie is particularly noted for his commentary on gold and silver. He argues that these metals have served as money throughout history and assumed the role of safe havens in times of crisis. While central banks can expand the money supply almost limitlessly, physical supplies of gold and silver remain finite, favoring these metals in the long run. He often alleges that gold and silver prices are manipulated or suppressed. According to this viewpoint, major banks use large volumes of paper gold, futures contracts, derivatives, to depress spot prices, as letting gold prices rise organically would highlight fiat currency's weaknesses. Willie also applies this argument to silver, contending that silver is likewise undervalued but manipulated. Nevertheless, Willie believes that such price manipulation cannot persist indefinitely. A surge in physical demand, he argues, will sooner or later expose discrepancies in the paper market, leading to a dramatic revaluation of both gold and silver. In such a scenario, gold could rise well into the thousands of dollars per ounce, while silver might break into triple-digit territory, an outcome that could shake the entire global financial system. 6. The U.S. economy and Federal Reserve criticisms. Given that Dr. Jim Willie is primarily based in the United States, he frequently critiques the Federal Reserve Fed. He contends that the Fed's policies of quantitative easing and prolonged low interest rates have masked deeper problems while magnifying systemic risks. In his view, these policies only offer temporary fixes without addressing underlying debt and leverage issues. His key points of contention include unbacked money creation. Willie argues that the Fed's expansionary practices are disconnected from real economic productivity. Over time, such policies lead to higher inflation, even if official statistics do not fully capture it. Banking system vulnerabilities. According to Willie, large U.S. banks are more fragile than they appear due to their exposure to highly leveraged derivative products. Wealth disparity. He contends that Federal Reserve policies inflate asset markets, stocks, real estate, mainly benefiting the wealthy, while rising costs of living erode the purchasing power of lower and middle-income groups. External debt and trade imbalances. Willie points to America's escalating national debt and trade deficits, predicting they will reduce trust in U.S. Treasury bonds over time and threaten the dollar's reserve status. Willie's criticisms draw from independent research and alternative media sources, which he sees as less prone to presenting sanitized official narratives. While his supporters view him as exposing underreported truths, critics accuse him of selective data usage or undue alarmism. 7. Geopolitical analyses. East-West economic rivalry. Dr. Jim Willie incorporates a geopolitical lens into much of his economic commentary. He posits that the world's financial and political power is shifting from Western nations, particularly the United States and the European Union, toward Eastern powers like China and Russia. This shift, in Willie's view, involves energy resources, major trade corridors, and the struggle for technological advantage. Key points he often raises include the Belt and Road Initiative. Willie believes China's massive infrastructure project will reshape global trade routes, reduce reliance on the dollar, and accelerate Eurasian economic growth. Gold-backed currency deals. He speculates about the possibility of China and Russia jointly introducing a gold-backed digital currency or forming a trade bloc that circumvents the dollar. Energy wars. Willie states that which currencies are used to settle oil and natural gas contracts is vital. If Russia shifts to selling energy in rubles or yuan, or in exchange for gold, he sees this as a direct threat to the petrodollar system. Diplomatic and military tensions. He asserts that international tensions and conflicts can hasten financial decoupling, leading to regional economic blocs and alternative payment networks that erode the dollar's reach. Willie often cites Russian, Chinese, or other non-Western media sources to bolster his arguments, which tend to frame developments as part of a broader East-West struggle. While mainstream sources may find these views too stark or speculative, Willie's supporters regard them as a clearer portrayal of how global power balances are evolving. 8. Supporters and critics. In the realm of economics and finance, Dr. Jim Willie is considered an alternative analyst rather than part of the mainstream. This status has earned him a committed following while also drawing criticism from established economists. Supporters. Belief in exposé of hidden realities. They see Willie's commentary as a revelation of financial manipulations overlooked by mainstream channels. Precious metals enthusiasts. Investors bullish on gold and silver tend to resonate with Willie's stance on the eventual surge in precious metal values. Those interested in conspiracy theories. Willie's emphasis on secret deals and under-the-radar developments appeals to people who suspect official narratives are incomplete. Critics. Accusations of excessive speculation. Critics argue that many of Willie's forecasts have either failed to materialize or lack solid backing. Disconnected from market realities. Some economists see Willie's views as too extreme, diverging significantly from conventional market indicators. Promotion of conspiracy theories. Central to their critique is that Willie relies heavily on data or rumors that mainstream economics deem unverified. Dr. Jim Willie often counters these critiques by stating that time will prove him right. His followers tend to regard short-term inaccuracies as less important than the larger, long-term trends he highlights. 9. Major themes in publications and interviews. Dr. Jim Willie appears regularly on podcasts, in online interviews, and through articles in which he reasserts or refines his views about global finance. Recurring themes include monetary policies and the prospect of inevitable collapse. Willie often labels the ongoing wave of central bank easing as unsustainable and believes it will lead to an unprecedented debt bubble. Global trade and the dollar's standing. He focuses on the likelihood of the dollar losing its primacy in oil transactions. In his view, geopolitical powerhouses like China and Russia are accelerating this shift. Manipulation in metal markets. According to Willie, the only reason gold and silver are not trading at much higher levels is price suppression, which he believes will eventually fail. Investment suggestions. While stopping short of giving direct investment advice, Willie regularly emphasizes the value of holding physical gold and silver. He sometimes comments on real estate, cryptocurrencies, or other commodities, but his primary stance remains consistent. Tangible assets are a hedge against potential financial turmoil. 10. Dr. Jim Willie's forecasts and their accuracy. Like many financial commentators, Dr. Jim Willie has made various predictions over the years. While some have aligned partially with real outcomes, others have not materialized according to his expected timelines. Critics highlight inaccurate or postponed forecasts, especially concerning the swift collapse of the dollar or hyperinflation that did not occur as predicted. Willie and his followers attribute such delays to factors like ongoing market manipulation or new geopolitical agreements that slowed down the anticipated shifts. They also stress that his analyses revolve more around long-term structural issues than short-term market timing, and that certain economic events might simply be unfolding later than initially expected. At the same time, supporters note that Willie accurately pointed out the continued expansion of central bank balance sheets and the trend of countries accumulating gold reserves. Whether these represent unique insights or broader trends also recognized by mainstream analysts is open to debate. 11. Conspiracy theories and critiques of mainstream economics. Dr. Jim Willie sometimes embraces viewpoints described as conspiracy theories, such as allegations of covert arrangements among global banking elites or claims that certain financial institutions deliberately engineer crises. These comments often lack direct support in official reports or academic literature, undermining their acceptance by mainstream experts. Nevertheless, Willie's core audience contends that the very absence of this information in major news outlets is evidence of systematic cover-ups. This tension results in a polarized reception. While some commend him for tackling subjects that major economists avoid, others dismiss his arguments as relying on rumor or anecdotal evidence. 12. Building an audience and media strategy. Dr. Jim Willie's influence stems in large part from digital media. Rather than appearing frequently on television networks or in major newspapers, he has cultivated a following through his website, Golden Jackass. The subscription-based model allows him to finance his research and post in-depth analyses without relying on traditional editorial norms. Podcasts and interviews. Alternative finance channels invite him to discuss his views, giving him a platform free from mainstream editorial constraints. Social media. Willie uses social media platforms to share shorter commentaries and link to his more extensive articles or interviews. This approach targets a niche yet dedicated audience, particularly those skeptical of mainstream financial narratives. Willie's unconventional or controversial theories find an environment of fewer restrictions online, aligning with audiences seeking alternative takes on global economics. 13. Dr. Jim Willie's place in the financial world. In mainstream banking circles or academia, Dr. Jim Willie is not widely cited. Instead, he operates as an independent commentator, an outsider who both intrigues and polarizes observers. Critics consider his warnings overly dire and his reliance on unofficial data problematic, but the financial turmoil of previous crises has also made many investors more open to unconventional perspectives. Those who value his work stress how events like the 2008 financial crisis validated skepticism toward institutional analyses. Willie's arguments about the unsustainability of constant monetary easing and the precarious nature of the global debt burden echo broader concerns, though he often frames them more bluntly. Overall, Dr. Jim Willie sits at the intersection of alternative finance commentary and mainstream critique. While he has a loyal core following, he is also subject to ongoing scrutiny by economists and analysts who question his methods and conclusions. 14. Conclusion and assessment. Dr. Jim Willie stands out in alternative finance circles through his strong critiques of central banks, fervent support for gold and silver, and emphasis on significant geopolitical realignments. His central premise is that the current global financial order, especially the dollar-based system, is unsustainable. According to Willie, ever-increasing debt and persistent market manipulation will eventually trigger a major monetary crisis, one in which holders of real assets, particularly precious metals, will thrive. Yet, questions remain as to whether his most dramatic predictions will unfold precisely as he envisions, and on what timeline. His track record has been mixed, and skepticism about certain forecasts lingers. Supporters respond by emphasizing that Willie's perspective is best understood as a warning about underlying fragilities that may require more time to materialize or that might manifest in ways not easily predicted. Regardless of these debates, Dr. Jim Willie has established a definite niche. His analyses, whether embraced or doubted, compel audiences to consider alternative possibilities and deeper layers of the global financial system. For that reason, those who engage with Willie's writings often do so with a blend of caution and curiosity, recognizing that while his approach can veer into unconventional territory, it may also provide a valuable counterpoint to mainstream narratives.
Don't forget to like our video and subscribe for our channel.